Crypto crashes are terrifying, but that doesn't mean you can't profit from them if you know what you're doing.
Tell them to bring me my money.
So here are 5 ways that you can make money while everyone else is losing it. And forewarning, some of these tactics are on the riskier side of the spectrum. I'm just giving out information on how these options work. I'm not a financial advisor. I'm not your spirit guide. I'm not your dad. Always do your own research as well. Number 1, the first way to profit in a crypto crash is definitely a personal favorite of mine. It's a fan favorite and probably the most obvious on this list, buying the dip. This is one of those strategies that's much easier said than done. And you need to be careful. You need to be careful that you're not buying a turd mid-flush only to go down further and further. And as difficult as it may be to buy more of something that you're actively watching decline in price, it's typically the best time to actually buy that thing as long as you've done your due diligence ahead of time. And I'm sure you've heard the saying, be fearful when others are greedy and greedy when others are fearful. I want to update this to have an open mind when others are closed-minded, because sometimes it's good to have a healthy amount of fear, and most of the time it's good to at least have an open mind. So, if China says for the 200th time that they're going to ban crypto again and everyone is fearful and we see a nice little daily correction, that's when it's best to be open-minded and look at the facts and say, hey, China has said this 199 times before, and in the long run, it didn't really matter. And despite the fact that things like this have happened before, we seem to forget how big the dips in crypto are. I mean, a 10% annual return is great in the stock market over the long run. And we're regularly given opportunities to buy dips of 10, 15, 20% in crypto. And a lot of times it recovers within the same day or within a day or two of the correction, and boom, there you go. That's an S&P 500 return in a couple days. Now, a lot of people will say, I bought the dip, but then it kept on dipping, or I hesitated to buy the dip because I thought it would go lower, and now it's back to an all-time high, and I missed out on all this money that I could have made. And here's the thing. If you're trying to decide what to do while a crypto is dipping, you're behind. You're missing opportunities, and you will keep missing opportunities because you need to have a plan ahead of time. Having a plan is absolutely necessary. So let's say Bitcoin is at $50,000 and you have $1,000 on the side that you want to save in case of a crypto dip. What you need to do is make a plan. So here is an example plan. Bitcoin's at $50,000. Your plan could say if Bitcoin drops to 45K, I'll buy $100 worth. If it drops to 40K, I'll buy $200 worth. 35K, $400 worth. It doesn't really matter so much what the exact figures are of the plan. It just matters that you have a plan. Now, obviously, it might be a little bit more complicated than this example that I just made because your portfolio probably is more than just Bitcoin, but you get the idea. This will prevent you from getting decision paralysis and never buying at all, or just impulsively buying too early. It just mitigates impulsivity. And maybe you're a person who's like, I can't do this. I'm going to be impulsive every single time. There's something that you can do. You can set a limit order for specific prices on dips. That way, there's literally an order out there. The price dips, it happens automatically. You don't even have to touch it. Now, if you don't feel comfortable leaving orders up and you want to do it yourself, CoinMarketCap, they have an app that actually allows you to set notifications when coins hit certain price points, and then you'll get this little ping that's like, hey, you said if it hit this price, you should buy it. And then if you stick to your plan, you would buy. Now, if you still feel a little bit lost or unsure of yourself, you can always join my Patreon, where we have a private community of people constantly talking about these things and a whole lot more content. So in there, you can find more specifics on what I'm up to each week, both in stocks and crypto. And I even post whenever I buy something, and I'll give my reasoning. That way you can look at the reasoning and see if it aligns with what you think as well. And we're doing pretty well, I gotta admit. Here's a portfolio snapshot. So if you wanna join, now is the time to do it, since the spots are limited. And I feel like a broken record saying this, but it literally sells out every single time. Moving on to the second way that you can make money in a crypto crash. We're gonna move on to a slightly riskier method, and that is shorting crypto. Now, this is going to get a little bit complicated, but no one said it'll be easy. At the very least, it's good to understand how these things work. So shorting crypto is basically betting against the price of a cryptocurrency. Basically, if crypto goes down, you make money. If it goes up, you lose money. It's the opposite of a normal crypto buy. But this is quite risky, especially in today's climate where, one piece of news can come out or one Elon tweet can come out, and this can spike the price of any various cryptocurrency. And this is especially amplified in altcoins, because in those, Positive or negative news really amplifies and reverberates through altcoins where you can see dramatic price swings from positive or negative news. Either way, if you're going to short crypto, just make sure you do a little bit of risk management beforehand to make sure that you're comfortable with it. So you've decided that you want to short Bitcoin. How do you do it? There are many platforms that trade crypto futures, but most of them are fairly limited as to what you can short or the various offerings with futures. So some of the more popular platforms to do this are Binance, Deribit, BitMEX, Kraken, and KuCoin. KuCoin is my favorite. It actually provides some pretty cool tricks that make shorting easier. So they have regular coins that you can buy that do futures trading technically in the background. So here's how it works. Let's say you wanted to short Bitcoin on a temporary dip. You could buy the coin on KuCoin with the ticker symbol BTC3S. This coin shorts Bitcoin futures at a 3 times leverage. So if Bitcoin drops 10% in one day, BTC3S reacts and does so 3 times harder. So you would actually gain 30% in that day. Now you might be thinking, well, I want to short a coin, but I don't want 3 times leverage, which is totally understandable if you ask me. So there's a workaround here because they only offer 3 times leverage. It's kind of crazy. But here's the workaround. So KuCoin offers a non-shorted version of Bitcoin at 3 times leverage. This coin is BTC3L, Bitcoin long. Basically, this means if Bitcoin goes up 10%, you make 30%. It's 3x leverage on the positive side. So here's the trick. You can buy both the 3x leverage long and the 3x leverage short coins in proportion to the leverage that you want. I know this gets a little bit complicated, but just hang in there with me. So if you wanted to short Bitcoin, but you don't want 3x leverage, here's an example. You could buy $300 of BTC3S and $200 of BTC3L. What this does is evens it out a little bit and you just have 1x leverage instead of 3x because you're both buying it long and short, but just more short. I hope that makes sense. Now, I know that was a bit much, but honestly, this is still much easier than trading futures yourself. And personally, I am much more of a buy and hold guy myself. I don't really mess with shorting too much, but there are a million ways to make money. So I like to present choices because I know there's someone who will watch this and be like, oh, that seems pretty cool. And speaking of choices, we still have 3 more ways to make money in a crash. So number 3, this is altcoins with price floors. So this is similar to buying the dip, but I wanted to give some more specific context here. So, Bitcoin is volatile, but what's even more volatile? Altcoins. Altcoins being so volatile have potential for deeper dips, but this enables a higher upside as well and slightly less risk in certain situations, and I will explain why. So when Bitcoin drops, altcoins generally drop even harder as people leave projects. You quickly lose people who were day trading that coin or it just wasn't a high conviction pick for them. So like, nah, it's dropping, I'm out of here. And then you're left with the people still holding that altcoin. These are generally big fans of the project, or they're in too deep and they feel that there's no point in selling now. I know everyone's had that feeling at least once. Or they're people who plan on holding for the long term no matter what, on holding through the dips. These are the people that you want because these are the people creating a price floor. And this means you are nearing the price floor once you're left with only these people. And this can actually take away some of the risk on your end if you're hopping into one of those projects on the floor. But now the question is, how do you know what the price floor is? And you can never know exactly, but you can get the sense of a price floor either by following a crypto for a while and just seeing where the price action goes, or taking a look at a chart and looking at support levels for the price. Now, of course, this is far from an exact science, but it does give you at least a starting point to go off of. Now, what this means is if the whole crypto market crashes, you might be able to buy a promising project at a rock bottom price without much downside potential. Now, of course, there's always exceptions to this. My personal rule of thumb here is to do this with projects that are actually solving real world issues that have money behind them, meaning they solve that problem, they're going to make a ton of money. Now, a good example of this is Algorand. If you look back to May 2021, when crypto dumped, Algo dumped as well, and then hung out around like 80 cents. And it hung out right there for about 4 months. It barely moved in price. And that's because there was a price floor there around the high 70-cent range. Now, this isn't to say that every altcoin will work out like this, but it's definitely better than buying at a peak and then losing 20% or 40% the next day. A situation where I personally did this was with Cardano. I knew it was a project with a great team and they were solving big problems, and it was pretty obvious that the price floor was right around $1. So I bought as many red days as I could over the course of a few months. Basically, any terrible, bloody day I was buying. So here are the days that I bought. And doing this enabled me to be up more than 150% on my position now that crypto has picked back up. It was just like a turbo booster was strapped on my back because I had the conviction for the project. I understood the price action. Of course, that's never perfect. And I was willing to buy on the days where I really didn't want to buy, which was those bloody red days. Now let's talk about tip number 4. Lending as liquidity. One big issue with buying the dip is sometimes you don't have extra cash lying around. You've invested all that you want to invest and the rest is just for other expenses. But it's always important, in my opinion, to have money ready to deploy. If I'd gone all in on that first red day on Cardano, I would still be up right now, but I'd be up around 70% instead of 150% plus, which of course is a massive difference. There's actually a sneaky way in order to make money with your cash on the side and still have cash ready to deploy. The way I do that is through USDT lending on KuCoin. So like I said before, with crypto, we tend to get a little bit greedy, wanting 60% annual returns with our money, when in reality, a 10 to 20% return annually is amazing. With USDT lending, you can easily get those kinds of returns, sometimes even more depending on what crypto is doing. If it's pumping, you can see these returns up to like 70% APY. But here's how it works. When you lend out USDT on KuCoin, you can lend it out for as few as 7 days. And it's typically returned back to you even quicker than that, like 1 or 2 or 3 days. So if you kept just 20% of your crypto portfolio as USDT ready to lend on the sidelines and then ready to deploy into a project if there was any big dips, you would likely make more money in the long term picking those great projects. So if Bitcoin dipped and you wanted to buy more, you would just stop your auto lend, let your funds return to you, and then invest them in Bitcoin. And then next time Bitcoin hits an all-time high, you could take a little bit of profits out of your USDT and just rinse and repeat. And like I said, I actually do this myself. Even though USDT is far from my favorite, I'm always lending out a little on the side just to have cash earning me money. In fact, I've made more than $15,000 just lending USDT in the last 5 or so months. Now, I don't really sell when things peak because I just like to accumulate and build my stash, but there's an active strategy if you want to take the active version of doing that. I like to just kind of build things up over time. I have an entire tutorial on USDT lending that I will pin above. Now let's do the 5th and final method to earn money during a crash, and this one is the easiest of them all. HODL. Hold on for dear life. Now, a wise man once said, you only lose money when you sell. Now, that's not always the best advice, but it has proven to be true many, many times. So if you're confident in your investments, meaning you've actually done the due diligence yourself and your investment plan is long-term, then there really isn't much of a reason to sell on dips. It's been proven, at least with the stock market, that people who buy and hold almost always come out on top of those who are trying to time the market. And the same goes with crypto, at least so far. Holding is by far the easiest and most efficient way to end up with more cash next year than you have today. So I hope that these methods were helpful. Make sure you hit that like button. Join the Patreon if you want even more content. If you want me to do research for you, get buy alerts, have a private community, do all that, make sure you grab one of those before they sell out. And I would just like to thank you so much for watching, and I hope you have a profitable day.